Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Ready? Jake, feel good?
I'm ready. I feel great. You haven't even complimented my new window shades once yet, though, so that's...
Can't see him.
Well... Anyway, I'm fine.
But I'm sure they're great.
I'm fine.
Is there other stuff in the house I should know about?
No.
Well, you look good. Things look fantastic.
See, it's not that hard.
Congrats.
It's just not that hard.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week, we bring you updates on the markets with unique perspectives from an amazing team of analysts. The intention of helping dairy and livestock producers manage their risk. I'm your host, Jim Matthews, reporting from Chicago on a beautiful Thursday morning. Joining me today, as always, from Kansas, Director of Feed Procurement, Mr. Jake Kingsley, and from Platteville, Wisconsin, Livestock and Grain Marketing Advisor, Mr. Cole Adams. Team, how are we today?
Doing very well this morning, Jim.
Doing well, Jim. Thanks for having me.
Cole, it's great to have you back, man. It's been a minute. You're a jack of all trades, reporting out of Southwest Wisconsin. You can do it all, man. You're focusing on some livestock today, some grain today. We always talk about we're helping those livestock producers manage their risk. So we're going to hit on that a bit today with you. Jake has a very well-lit room for all the viewers of the Grain Feed. He has some very nice window treatments, I believe, Jake. Congratulations. Your shirt looks bright red, looking good.
Thank you, Jim. I appreciate it. Just another layer between me and the sun.
That's right.
Always good.
Yeah, we all need that. We all need that. We've got a lot to talk about because the markets have kind of crept up a little bit since the last episode. So let's just jump right to it. So Paige, if you would kindly timestamp the broadcast, it's about 10:15 Chicago time on Thursday morning. And again, grains are up a little bit. We've got December corn is up about 4.5 cents. It's back above 420. We're like 422, 423 this morning. Same drill yesterday. We ultimately pulled her back below 420 yesterday by the end of the session, but the market clearly feels comfortable flirting with this territory for the time being. We have November beans up another 15 cents. We're back to 1080 on Novi beans. And then soybean meal, stubborn little byproduct. We have crept our way back north of the $300 per ton mark. Not that we were below, but we were awfully close here a week or so ago. And now we're back into this 320s territory on December meal. So for any of us getting our hopes up that we would creep down and just work around that 300 level, we've had a nice bounce here for that stubborn little byproduct. We're trading awfully close to 330 today, and that's up about $8 on the day. So we got to watch out for that stubborn little guy. So there's a lot happening here. And Cole, we've got you aboard here this morning to talk about this, and you can wear both hats. We've got livestock hat and your grain hat that you have perfected that combo, servicing both producers. So Cole, what have you been seeing in each of these respective markets here recently?
Yeah, so $4 corn is certainly a huge number as we got down to there. Certainly guys were starting to hedge themselves as we inched down to this 420 area the first time around, got down a little bit further to that $4, didn't break it, had enough issues in the market to, prevent these funds from going further short, breaking that $4 area. Certainly it was a great opportunity to get some feed bought, as I know you guys have certainly talked about and seen on the dairy side of things. Cattle side, same thing as well. It is an opportunity for guys to get some of those needs locked up here, or at least a portion, and as we head into harvest. As you kind of look at the cattle side of things, it's been a little bit of a struggle. So a break in the grain prices are certainly welcomed here as we talk about basis. Same issues that going on in the cattle side. For where the cash live cattle are, certainly feeder cattle prices are responding to where cash is, not necessarily futures. So we are running into some issues where with very high break evens where it becomes a struggle to try to hedge a producer using futures options, anything like that. Basis is becoming a very key player here. It is something to be concerned about as we move forward. But overall, great opportunity here in grains. We'll see what August brings. They do talk about some hot, dry weather here as we move forward. Might continue to see a little bit of short covering take place here. Might also be met with some bin clean outs as well as we head into August as guys prepare for fall harvest. That'll be something else to see how these markets juggle themselves with those two factors here.
Yeah, it's a very interesting period here, Cole. Like you said, I like the past perspective here because when this market, we're talking about December corn, when this market did initially break down, it felt like 420 was a nice little support area there. I think it coincided with we broke down pretty aggressively after that stocks and acreage report. And then again, after that July WASD ultimately was when we really trying to grind around $4. 420 served as a nice little support area. It's interesting that we've crept back up into it and the market's now hovering closely to it. You brought up the funds and we've been beating this one up, right? The funds just have a massive net short position. It's hard to emphasize that enough because they flirted in record territory on that position in terms of their net short in corn. So that's managed money, net short corn in a big way, but also across other grains and oilseeds, right? We've had some pretty neat charts from our insights team showing us that it appears to be a record short as well when you combine their net short position across, beans, oil, meal, wheat, corn. I mean, so that they've clearly have gone into the full bearish commodities mode. So it's been super interesting there. But we've also talked about, Cole, that vulnerability heading into August with that huge net short position. You talked about the weather. That's a big one because we're in a pretty crucial development period here for corn now. And the market likes to talk about that big ridge, that high pressure ridge sitting over the Rockies. Is that going to oscillate over? These are words that I don't understand, by the way. Oscillate over into the Midwest and sit there and block all that precip from coming in. Maybe we get 90s to 100s. I know, Jake, that's pretty normal for Kansas. You shrug off 100 degrees. But for Cole and I, that's kind of a big deal, right? You sit around 100 degrees for a week or two, you start to roast some crops here for a bit. So to emphasize that's not happening yet, but that's what the market's watching for is that ridge over the Rockies. When is it going to shift over and how far? But like you said, Cole, it's also going to be bin clean out season, right? When we know the Midwest farmer has a ton of old crop corn still sitting on the farm. What does that look like from your perspective? Because you're talking to the livestock folks, you're talking to the grain farmers. I mean, that's still a very real potential impact basis, right? As we head in towards harvest here, how's that impacting your view on the markets, knowing how much is still there on farm?
Yeah, so we've seen some basis opportunities really kind of hand to mouth going about a week and a half out at a time here. Mainly to the processors. If they need some grain, they'll push that basis a little bit very quickly, only to get the bushels that they need to get priced. And then they quickly back that off. Similar going to be into fall. You're going to get some normal fall basis. I think it will stay, pretty weak because we'll have plenty of producers that are unsold this year. As we've talked to elevators across the country, very little is sold as we talk about new crop coming out of the field here. I think there's going to be a lot of spotted bushels to fulfill anybody that don't have storage, as well as the banker wanting to fulfill their notes on the crop that you borrowed against here. So I do think we could get into some decent basis opportunities on the grain selling side as we head into November, December timeframe, because a lot of those bushels, once they're in the bin, they're hard to get back out. We've seen that last year. Some good basis pushes in some areas if they were a little bit lighter on some crops, needing to push that basis to get that corn bought out of producers' hands. It is one selling opportunity I'll be looking for as we head through fall.
Okay, very cool. And then, speaking of heading into fall, I mean, we're recording this on July 25th. We are about a month away, at least for my kids, but we're a month away from going back to school. Next thing you know, it's Labor Day, right? We're going to be in the full swing of this. Is there anything that we need to be looking for, like from the livestock side, from a supply and demand perspective that potentially impacts pricing as we move into the fall months? I know we should still enjoy summer. Keep enjoying your summer, everyone. I'm the Debbie Downer that has to point out that fall, and then as a true Northerner, winter is coming. Winter is coming. But that being said, is there anything we need to watch out for, Cole, as we move into that time frame from the livestock perspective?
Yeah, the big thing is seasonality. So as we get to this time of the year, we're kind of past your major holidays of the grilling season. We're going to be getting back into school. Typically, that cutout tops out in mid-June. We did see a rally hard through about the first week of July. Since then, over the last 2 weeks, we have fallen back. So not anything counter seasonal, surprising from this standpoint. But as we talk about tight supplies, that cutout will be one big thing that these packers keep their eye on, as they've been trying to manage how many cattle they bring to town to kill, to try to manage supplies on their end, force that cutout as high as they can to try to help their profitability as well. So that'll be the continued shift in focus that this market looks at.
Okay, awesome. Thank you for that, Cole. Jake, let's turn it over to you. And Cole had some really interesting insights there from a basis standpoint as we move into what will be the harvest season here coming up before we know it. But Jake, you've been super aggressive along with the feed foundations team at Everag over the past couple weeks in terms of the feed buyers stepping in, especially from a future standpoint when we were grinding along the lows of a week or so ago. What's your take on how that's impacted the physical and cash markets here over the last week or two?
Yeah, we've been pretty grateful that we were able to step in and get some ownership, especially on the futures front ahead of this bounce here. We haven't seen any material change to basis as a response to this futures rally yet, but we are getting closer to harvest, and 20 cents on the futures market might be a nice little incentive for some of these farmers to sell that last little bit or get another layer of new crop on the books. And maybe that helps get this basis market to break down a little bit earlier. We had talked, I think, last week about the fact that the grain producer has come through the primary part of their season where they need to have cash flow to pay bills and take care of finances on the farm, so where they could maybe be more patient for longer than usual. And it may take getting to harvest and needing to create space to flush the stuff out of the bin. So we're another week closer to that with a little financial incentive to maybe turn loose of something that may help us out, but we could still drag this all the way into October or November before we see basis break down. This futures rally, I think we've talked about, is probably more news related, political headlines and some uncertainty redeveloping there, causing maybe the managed money funds positions to trim up some of their shorts and reallocate some of their cash. But fundamentally, the crops that we have in the ground right now are still very healthy. We, of course, have some spots that are of concern, but we have that every year. But on the overall crop, conditions are good. Weather is still by and large good. We talked about this potential for a high pressure ridge to move in. Thankfully, we're already at the end of July. Most of the corn is pollinated. So we could weather that storm a little bit better than we would if it showed up and parked for 3 weeks at the 1st of June or the middle of June there. So things are still very much in our favor as feed buyers, I think. We can be patient. If you haven't gotten started buying feed yet, these aren't necessarily unattractive cash values even here following this rally. If you don't have anything on the books, it's still probably worth stepping in and getting something done. A lot of opportunity still out there. We're looking to be patient on some of this stuff as we move into harvest and expect some good yields. Definitely want to be taking advantage of things while we're down here.
Jake, thank you for that. You brought up a couple notes again that we've continued to hammer the fund position. I think people are probably sick of me talking about it, but I do think it remains relevant because you then also brought up the geopolitical situation. There's been a few shifts in the presidential campaign here in the US. So it's been a truly historical, almost out of this world at times, presidential campaign of this summer. But it did feel like one presidential candidate had a lot of momentum going his way, right, heading in towards this election. I think the market was positioning itself, thinking perhaps that candidate had a good shot at the White House. Right now we have a new candidate has stepped in because one dropped out, and the funds are now looking at this saying, okay, the momentum has at least slowed. What would we do if this new candidate were potentially going to take the White House? And also, how does that impact down ballot voting in terms of who ultimately controls both chambers of Congress as you move into the end of the year and beginning of 2025? So that heavy exposure from a net short standpoint is causing them to potentially, rethink that. We've talked about weather, and weather, like you said, Jake, has overall been pretty good. We soaked this crop with plenty of rainfall, arguably too much in certain areas this spring. We haven't really been hit with that dramatic drought spell that we did get hit with last summer a couple times. So even if it does ultimately come to fruition, what is the actual upside of this market? Is it more of just a short-term bounce here and something that we don't need to panic and chase as feed buyers as we see this bounce here today? And again, like you said, Jake, even with a 20-cent bounce in corn and 20 plus bucks in meal, these are still great feed prices. You compared to what we looked the last 3 years, 4 years, even if you stepped in right now with the screens being green, still a pretty good buy, right, Jake?
I think so.
Okay, good deal. Well, I think that's probably it for today. Excellent work. Cole, huge thanks for returning to the show. Great to have your insights today, bud.
Thanks for having me. It was a pleasure.
Absolutely. That's awesome. We'd also like to thank Corey and the Everag Insights crew for their support. Thank you to Paige and Lexi for their production magic. And thank you to the viewers for watching the grain feed. Contact information is on the screen. We greatly appreciate your feedback. That's all for today. We'll see you next time on the Grain Feed.